Hey guys, welcome to today's video. In this video, I'm going to cover SMC liquidity concepts, right? Most of you, you've seen that in my past setups on the group. Identify liquidity, right? I try to identify liquidity or look out for liquidity in my analysis, and you're probably asking what liquidity is, right? So liquidity is basically stop orders or stop losses, right? So whenever we place our trades in the market and then we put a stop loss, that level at which the stop loss lies is what we call liquidity. Hence, this is hence the definition of liquidity on this image right now is this is where most orders lie, right? So whenever we engage in the market, we enter the market, right, and then we put our stops on a certain level. That level out there is gonna be identified as liquidity, especially if that level is based on the retail strategy, right? So when I say the retail strategy, what do I mean? So the retail strategy is your typical support and resistance, your patterns, and your trend lines, right? Because over the past years, people have been learning support and resistance, patterns, and trend lines, right? And it has been flooded a lot in the trading industry that this is a strategy, right? So the smart money identify those trend lines. They look at those trend lines, identify those trend lines, and they see that a lot of orders that lie beneath those orders, those trend lines and support and resistance and patterns. And then they tend to target that money right there and grab it and push it in their favorable direction. So those levels right there, or that kind of money that's trading based on retail strategy, is called what we call dumb money. Hence, there's what we call smart money, because smart money looks out what dumb money doesn't look for, right? So these are the types of liquidity that we have, right? We got equal highs, equal lows, we got trending or trend line liquidity, and then we got the range and consolidation liquidity, right? So with the double taps or equal highs, equal lows, as you can see here, we got a formation price pushing to the downside, right? And then price forms this equal lows right here, right? And then it seems like price is respecting this equal highs. I mean, it pushes to the downside, only to come and grab the liquidity above here. So most people enter their trades at that point, right? They'll enter trades at this point right here, right? They'll place their orders and then the stops there. Liquidity comes and grabs, right? It grabs this liquidity above here, stops. Price comes and grabs the liquidity above the stops, then pushes to the downside. The same way here, we get a trend line formation where price is forming a trend line and people seeing first touch, second touch, third touch, the buy here, price pushes to the upside, seems to be respecting it. And then it comes and push down here just to grab the liquidity of the stops that are here. So for those people that don't exit their trades and they're still here, price comes and grabs the liquidity below this, then it pushes in the direction. The same thing that we have here. So here we get consolidation, right? We get price having a level of resistance up there, the level of support down here, right? Price is consolidated between the two. Then price breaks out, grabs liquidity here. Most people think, oh, this is now price pushing to the downside. They'll probably look out for another level of resistance here that price should come in, respect, and push it downside, only to be validated. Price goes up here, grabs the liquidity up here, and then does the same thing, right? So in the case of a consolidation or range, we got two liquidity points, right? We got the liquidity up here and the liquidity down here. So here we get people that are trying to sell the market, got sellers, then here we got buyers, right? So the market grabs the liquidity of the buyers, takes out the buyers, people that have put their limit orders here, and then the stop losses there. It takes out the liquidity, grabs it, right? Takes them out of the market and heading for these guys here, the sellers, and takes them out of the market too. And then it pushes in that direction, right? So this is very important in your analysis. It's going to help you to refine your entries, because then you'll be able to tell which are the best points of interest to engage with the market. As you can see here, if you're able to build a confluence of order blocks, supply and demand, and your entry levels, right, into liquidity concepts, you'll be able to identify key levels and try to avoid. So let's say there's an order block right here at this point, right? You try to avoid this order block because you know that there's liquidity lying above here that price is going to come and grab and then eventually push to the downside, right? So these are the types of liquidity that you have to look out for in the market. So I'm going to go on the charts and show you a couple of examples, right? So here start over actually here, right? So this is a fixed example that we have here as resistance. So most people, as you can see, have a break of structure here. They get a break and then expecting a retest, right? So price respects this, the retest from some form of double tap, right? And then what happens? Price comes and grab liquidity up here because people are putting the stops above this level here, right? Putting the stops above this level here. Liquidity is grabbed and then eventually price pushes it downside. But if you're using SMC, of course, you will see that this is the order block right here that price is going to target to it, price is going to head to, right? Here's another example where we have both resistance and support levels line, right? People trying to sell the market at this point, putting the stops there, and other people trying to buy the market, putting the stops here. What does price do? Price comes and grabs liquidity above here, right? Price grabs liquidity here, and then price also grabs liquidity here, and then eventually push to the downside, right? So this is going to help you avoid being on the wrong side of the trade, right? As you can see, it plays out a lot of manipulation plays out when you're using support and resistance. And if you're able to use these concepts, this strategy, try to use this strategy of support and resistance as liquidity with SMC, it's going to help you refine and avoid a lot of manipulation in the market. So here we got another example. You see price breaks, right? And then look at the retest here. Price retest pushes to the upside, right? So those people that didn't take out their orders, what does price do? Comes strongly with a lot of momentum to the downside to grab the liquidity below. As you can see, identify the stops below here, the stops below here. Price comes and grab this, and then eventually pushes to the upside, right? And then here we got a good example where we got different liquidity points line, right? So we got initially we got a trend line, right? Price trending to the downside, right? Most people say this as a first touch, second touch, third touch, fourth touch. For the fifth touch, what happens? Price grabs liquidity below, right? It fails to respect the trend line, grabs the liquidity below, heads for the liquidity above and grabs the liquidity. Right at this point, people are confused now, right? People are confused. What happens? It goes into some form of range, right? Because expecting price breaks here, looking at the retest. What happens? Price here forms this high and this forms this low. Price comes and grabs liquidity above this high, and then comes and grabs liquidity below this low. Eventually, it pushes to the upside, right? And then here we got a good break and retest example where we see price break, right? Price breaks above this level, and then price comes here, retest of this level, right? Starts to range. As it is ranging, people are selling at this point, people are buying at this point, and then price comes and grabs liquidity below this support level. Well, obviously the stops will be light, and then eventually it pushes to the upside, right? It grabs liquidity of the people that are selling at this point, right? And then here we got a trend line liquidity setup. See price forming a trend line, right? Price respecting of this touch, the second touch, the third touch, price disrespects this and grabs liquidity, right? For people that have been selling at this point, it's gonna grab the liquidity here, goes for the order block, then shoots to the downside, right? So you incorporating this, it's gonna help you avoid manipulation. As I said, it's gonna help you avoid manipulation. You're gonna look out for what you need to look out for and understand price's agenda, and that's also amazing about SMC, right? So SMC makes you understand the market in a broader way and understand what's going on, not only based on lines or trends. It's gonna make you understand what price is doing and what it means, right? So yeah, so these are examples of liquidity. Try to apply it, try to backtest it on your charts. Try to look for double taps, double taps, double bottoms, trend lines, support and resistance. Try to look at those levels, right? Especially the typical levels. Try to look at them and try to incorporate them with SMC, and then you'll be able to tell which levels are good for you for entry and the likes. Alright guys, hope you like this video. Don't forget to subscribe, leave a comment. See you next time.